Today I'm going to talk about the transformation of Paladin from a single asset company in care and maintenance to a serious global producer of uranium with scale and upside potential. Over the last couple of years since care and maintenance, the company's made several key advances in the timeline that's taken us from care and maintenance to our first customer shipment, which we delivered in July this year. Some key milestones on that journey included completion of the project, as well as achieving our first production milestone in March 2024. We've been included on the ASX 100, and our most recent announcement is the proposed acquisition of Fission Uranium. So very few mining projects complete on time and within budget, and then get their first shipment away so quickly. It's an impressive fact that we're able to do that, I think, but more important, it enables Paladin Energy to participate and take advantage of the strong uranium market fundamentals. There's been a lot of talk about what's driving the uranium market fundamentals, but I'll just recap quickly. The growth in uranium demand has been driven by global decarbonisation. The left side chart shows that there's already 440 operating nuclear reactors worldwide, and there's many more in various stages of construction and planning. The chart on the right side shows the supply shortage, and that's a consequence of underinvestment in uranium mining for the last 10 years. Global geopolitical instability has also led to shortages in supply and supporting maintenance of strong price levels. So what this means is that our timing couldn't have been better for our return to production, and we're now able to take advantage of the current price environment. So we're back in production. This photo was actually taken on the 30th of March, and these are the first 6 drums that we produced. But if I take a step back, it started with the commissioning of our ROM on the 20th of January. And we progressively commissioned the plant just ahead of the material flow through the process. And we started accumulating uranium peroxide in the final thickener just prior to Easter. The last piece of the plant to construct was the final packaging plant, which included the centrifuge, the kiln, and the automated drumming plant. So we completed the construction, we commissioned that plant, and in the early hours of March 30, we produced these 6 drums. So we paused very quickly, took a quick photo, got everyone back to work, and we restarted production, and we haven't stopped since. The execution of the commissioning and the construction and moving back into commercial production couldn't have gone any better for us, and it's certainly a highlight of my career. The restart of production was all about maintaining the existing flow sheet and chemistry, but updating the equipment and removing known bottlenecks. The project was completed on time and within our cost forecast. We spent about $120 million US, split between refurbishment and debottlenecking in a ratio of about 60-40. The refurbishment scope brought the existing plant back into operation and ready to run. The debottlenecking scope removed known performance challenges and included chute improvements, motor and pump upgrades, additional hydrocyclones in our classification circuit, the addition of pre-leach surge tanks to maintain consistent flow through the leach circuit, improvements to the CCD design, and of course installation of a world-class packaging plant. Some interesting numbers about the plant. We refurbished about 800 pumps. We installed about 25 kilometres of piping. We refurbished or replaced over 5,000 valves. We used 930 tonnes of scaffolding, put down 52 tonnes of paint, and applied 2,100 square metres of steelwork. It was completed by 1,300 local people without a single lost time injury for the entire duration of the refurbishment program. So the project was conducted exceptionally well, and it's certainly conducted in a way that's as good, if not better, than any other project I've seen in the last 30 years in the resource industry. This is the management team that we have at Langer Heinrich. we've been able to attract incredible talent throughout the entire organisation, from the operators, the maintainers, all the way through to the management team. We've got a single expat as our operating general manager, but the rest of the team we've been able to attract from some of our competitors with significant experience in uranium mining, processing, but also experience in other commodities around Namibia and Southern Africa. Together, they've achieved some outstanding results. By the end of the last financial year, they produced just over 517,000 pounds of product. We got away our first shipment of just under 320,000 pounds of uranium. In addition to that, we've put out our first set of guidance for the next financial year. It's a ramp-up year, but we are targeting production between 4 and 4.5 million pounds. And I expect that the second half of the year will be a lot stronger as the first as we go through that ramp-up. So the mine's currently running exceptionally well. We've got a great team of people. The plant's performing as per our expectations, and I'm certainly looking forward to delivering on those guidance numbers next year. So now it's in production, we've shifted our thinking towards what's next. We're currently in a stockpile reclaim phase, and we don't commence mining till the beginning of FY26. But we started turning our mind towards maximising the benefits of a high uranium price environment, and we'll start looking at opportunities for additional tonnes from the existing footprint through lower cut-off grades or additional pushbacks in the existing pit. We can also start looking at a range of processing optimisations and technical improvements to reduce waste and recover ore that might be present in coarse rejects or tailings, and we'll use appropriate technologies to do so. What you see in this image, particularly in the long orange rectangle, is ML140. That's our current mining lease. The red parts in that picture is our current reserve. To the left of that, you can see the large orange square. That's ML172 rather. In this financial year, we'll commence exploration drilling in ML172 and see if we can expand the ore resource and reserves to increase the mining phase as we move into the future. So we have a robust plan laid out for the asset for the next 17 years. We've got a fantastic facility that's working exceptionally well and conditions that provide us with the opportunity with upside potential. Outside of Langer Heinrich, we've got a great pipeline of projects with an enviable resource position. Within this resource, extensive exploration has already been complete with over $140 million spent to date. We've exposure outside of Namibia in fantastic mining jurisdictions such as Canada and Australia. We've got about 440 million pounds of high-grade resource located in the right mining jurisdictions, and at the right time, all of them will have their day. More specifically on Michelin, it's a very large resource with over 127 million pounds at 860 ppm grade. We own 100% of this asset. Substantial work has been complete and exploration recommenced in 2022. Right now we have 8 exploration geologists with a casual crew of another 26 people. We've recommenced drilling with the objective of growing our open pittable resource. We also intend to undertake the PFS study in FY25 as we drive this project forward. So Michelin's progressing really well, and we're increasing our confidence with this project every day. So the last year's been pretty busy, to say the least, and I've covered a fair bit of ground very quickly, but it's not all we've been doing. So whilst we have Langer Heinrich up and running and it's producing well, we've got customer deliveries in play. We've been really busy on the M&A front. And you may have already read about our intent to acquire Fission Uranium, located in the Athabasca region in the Saskatchewan province in Canada. For those of you that are unaware, the Athabasca is to uranium what the Pilbara is to iron ore. It's a big resource, and we're really excited about having a presence in that region. So the deal highlights for us is a 30% premium on the 20-day VWAP. Paladin will list on the TSX at the closing of the transaction. It's a transaction that's supported by the Fission board. It doesn't require Paladin shareholder approval, and we expect to close that transaction in the September quarter this year. But as an operator, the most exciting part of the Fission transaction is the acquisition of Patterson Lake South. It's an exceptionally exciting project, 130 million pounds of resource at 1.78% grade. It's high grade, it's easy to process. There's good access to key infrastructure, and compared to most other resources, as you can see in the diagram on the right, it's very shallow. But more importantly, all of the significant aspects of this project have been done before. It's been done in this region, and we're looking forward to progressing that project. There's clearly benefits to both shareholders in Paladin and Fission. For the Paladin shareholders, there's expansion of the growth pipeline to become a multi-asset producer by 2029. There's increased exposure to these attractive market fundamentals, and of course exposure to increased capital markets through the listing on the TSX. For the Fission shareholders, there's the 30% premium to the Fission 20-day VWAP. There's retention of TSX listed shares. There's the ability to participate in the Paladin upside. There's participation as 24% shareholders in a global multi-asset producer, and continued exposure to the PLS project, which of course is now de-risked by being part of the Paladin Group, which is underpinned by LHU production and a customer offtake book that's robust. So what's clear here is that there's terrific benefits for both shareholders, and I think you can see why this project really makes sense for Paladin to embark on this journey. So to sum up where Paladin is today, we've delivered production from Langer Heinrich. We're a global producer with scale and current exposure to the strong uranium market. We have a contract book that's one of the best in the industry, and we have a pipeline of outstanding projects with development and exploration underway. We've announced our key M&A activity with the proposed acquisition of Fission, and looking forward, we'll establish a capital management framework to drive sustainable value to our shareholders. So to close, Paladin Energy is now an ASX 100 listed company. We're a world-class uranium producer, and we're a company that delivers on our promise. So thank you for listening.
Thank you, Paul. We've got a little bit of time. Are there any questions from the floor? I might ask a quick question. Paul, in terms of operating in Namibia, the photo that we've just seen, obviously we can see that you've found workers and whatnot. Can you tell us a little bit about operating and what that experience and journey has been like?
Yeah, Namibia is a fantastic jurisdiction to operate. It's very friendly. There's very capable resources. They have a very ready supply of well-qualified workers, particularly at trade and operator level. So we've had no issue finding a workforce. We've got 320 employees. We also employ another 150 contractors through our mining contractor, and we've got a really terrific group of people. They work extremely well. The quality of the workmanship is exceptional, and as you can see through the completion of the project, people work in a very timely manner. So it's been a really positive experience getting Langer Heinrich restarted with a really fabulous group of people. Very technically competent, so we have some competitor operations nearby, and we've been able to attract really top quality technical resources with long experience in uranium, and that's been really helpful as we're starting that ramp up program. So it's been fantastic.